Welcome to episode number 43 of Turning $100 into $1 million, the series where I risk a whopping $100 of my money in an attempt for your entertainment to turn it into $1 million. We do have another stock, a classic stock to revisit in this episode that we have taken a look at a couple times. Basically, we're just going to be looking at the upshot of all of the action and all of the hype and all of the people telling me I was wrong about this stock. You'll know it if you're in the penny stock world. It is a household name by now. But we'll take a look at the profit and loss numbers right now. My portfolio today was mostly green, and we have another stock that is now back in the green after a very long time of turning into the red. So it was a very green day today, despite the rocky, shaky market. It was red for the day, green for the day, and it ended up closing green for the day by the closing point, up over 100 points today. So a rocky day for the market, but nonetheless, most of my portfolio was in the green. Unfortunately, a little bit deeper hold on DGLY, so that did definitely eat up a lot of any wins. So we'll have to see what happens with DGLY. Unfortunately now, according to Webull, it is $2 was the last price here. But we'll take a look at the chart and analyze it a little bit deeper. But RF more green today, up just about 6% there, or 130. DGLY unfortunately now down over 51.5%, or 46.86. Levi though is a stock that's back in the green after a very long hiatus. Countless episodes of being in the red. We're probably going on 20 episodes now, that last time since it was in the green. But it is up 1.15%, or 30 cents. Viacom 1405, more green on Viacom. Now we're up about 92.5% on Viacom. OXLC 392, or about 10% down. And if you would like free stocks, as always, go ahead and use my link down below in the description, where you can get 2 free stocks, all on me, all free, one valued up to $1,400 when you use my link down below and sign up with Webull. Go ahead and use my link down below, click it in the description. So first stock we'll look at, great day today for RF. Beautiful uptrend today. Maybe only 1 second that it lasted in the red, but basically it was in the green the entire day, despite the not so consistent market today. So it was up 28 cents, or 2.5%. A little bit of action after hours. It does still remain in the red though for the 5 days. For the week we're looking at 2.7 down for the week, or at least the trading days of the week, as we're heading into the weekend now. 1 month, really not too red, only about 3.36%. 6 months looking up. Year to date, you can see this visual here. I'd call this an uptrend by now. Up, down, up, down, up, down, but it is definitely an uptrend by now, as far as if you count it from March or even May. Even July, you can call it an uptrend from there. DGLY, see on Webull it says that the last price was $2 for DGLY, when in fact, if you look at the Google stats here, closed at 196 today. So a little bit of a discrepancy there, but you got the idea. It definitely did go below $2 today. You cannot refute that, which is not a good sign for this stock. It was $3, which I was hoping was the bulwark, and then $2 I was hoping was the stronghold, and now it's below 2. So perhaps we might have to sell at a loss, or just stay patient and keep on holding. Perhaps a dead cat bounce could be coming soon, where it's just so oversold that it's overdue for a bounce. We'll have to see. September is historically a bad month for the market. If you look at history, September is not a good month for the market, so you shouldn't expect your stocks to be doing good this month. But DGLY hasn't had any positive news really in these last several weeks. Levi up another 5 cents today. Now we're comfortably over the 13 mark. It soared right past 13. Beautiful, beautiful action with Levi here for the month. Up over 3%. 6 months. Up, down in the beginning of the 6 month period, but went below 13 and now it's back over 13. So we're hoping to try to touch 14, 15, 16 again. Should be coming soon if the trend is my friend. Viacom only 2 cents down today, was up for most of the day. Closed in the red though. 5 days though. Beautiful, beautiful. Up over almost 3% there for the 5 days. 1 month, we're looking at about 12% up for the month. 6 months even more. Over 81% there. Gorgeous uptrend. Picture perfect. You couldn't have done it any better. Viacom is going back, way back into its previous territory, and hopefully we'll sell this soon, but I do like that dividend yield of 3.28%, so I want to hold on to it for that. More dividends should be coming soon. OXLC 7 cents for the day, over 1.5%, up for the 5 days, over 5%, 1 month, up, down, basically it's break even for the 1 month chart. Roller coaster ride for that 6 month chart there, but it's kind of stabilizing now, hoping for some clear indication of where this stock could move next. But the stock that we must revisit after everyone was calling me out saying you're wrong on this stock. It's going to the moon, hold on to it, everyone hold on to it, it's going to double digits, it's going even higher than that, hold on. But when everything was said and done and the waters cleared, at the end of the day, this stock totally tumbled and tanked and cratered. And that is going to be GNUS. We got to look back at it. GNUS Brands. It's a clever ticker symbol. It's a GNUS ticker symbol. GNUS. But no good news for this stock whatsoever. If you look at the 5 days, the 1 month, 6 months just so happens to be in the green because it started so low. But all you have to do is go back into mid to the end of May, and this stock is a goner. It is, if you got in before the spike, then you're still up technically, but I doubt anyone is still holding it from all the way back December, January. And I see in these Robinhood groups, people are still saying, buy GNUS, it's going to the moon, keep on holding. But they hold, and it continues to go down. So, if it wasn't clear yet, my viewpoint on this stock, it would definitely be not a buy. But let's take a look at why and what the articles are saying. So the articles are rather negative. Not so good headlines here. Why you should stay away from GNUS brand stock. Not something you want your company to have plastered all over the internet, that's for sure. Then the subtitle here, GNUS stock is worth at best only 46 cents per share, implying an expected drop of 56% from here. Now, would that mean that I'm confident enough to short it? No, you never want to do that. It's very dangerous to hold a penny stock short for more than a day, at least. Very, very cautious you have to be when it comes to shorting a stock, and I wouldn't do that, and I wouldn't recommend doing that. But I'm not confident that it's going to have any upside, so I'm definitely negative when it comes to the stock, but I wouldn't short it. So GNUS is down over 38% in the past month. In fact, since July 22nd, GNUS stock has dropped 46% from 183 to 104. The author had warned investors then that the stock was likely to fall in that article of Beware Shareholder Dilution with GNUS brand stock. At that time, the author wrote that GNUS stock was likely worth to between 10 cents and 12 cents per share. That's even lower than the 46 cents at best. Therefore, even today, I believe that investors should stay away from the stock. Let's take a look at where it stands now. So the company reported in quarter 2 earnings results on the 14th. As expected, they were underwhelming. Company lost money, head over feet, and there is every reason to believe this will continue. You can read the company's 10-quarter report. It shows that it lost $2.376 million in operating income, including net financial income. It lost $2.66 million in the quarter. Moreover, the 10Q showed that in the first half it generated a negative free cash flow of $2.33 million, and on about how much money it's losing and how much of a piece of garbage this company ended up being. Another article here, why it sank 26.7% in August. So it launched the cartoon channel, an ad-supported streaming service for children. It's contributing to the streaming wars. Stock skyrocketed on hopes that the platform could ride momentum in the streaming space and carve out a niche by focusing on content for kids. There's definitely some market share there. The company share price is now down roughly 91% from the 52-week high of $11.73 per share that it hit a few months ago. So it's a small company generating relatively little revenue and ramping up content production and marketing initiatives. Business outlook remains highly speculative. Sales fell 73% year over year last quarter, coming in just about $334,000, which is absolutely nothing. Business posted a net loss of $5.8 million in the quarter. Now what? Stock continued to slide in September amid a sell-off in the broader market. Company share price is down roughly 6%. The capitalization of the stock is only $230 million. Even after the sell-off, GNUS share price has climbed roughly 280% year to date. But the explosive gains have taken place even as the company has increased its outstanding share count by more than 900%. And one more for good luck. Avoiding GNUS Brands International is a no-brainer. GNUS stock could topple in the face of mounting legal woes. There are two ways to look at GNUS, depending on your focus. Short term, something pretty remarkable has happened when GNUS stock shot up between May 4th and June 3rd from 33 cents per share to $7.93. The company produces cartoons for kids, etc., which is definitely benefiting, and it was during the COVID-19 shutdown and when lockdown was essentially at its peak. But value investors who, let's say, bought in June 2016, who wouldn't exactly call $7.93 a giddy pick. In fact, the stock dropped 21 cents per share over those 4 years. Fast forward to the end of August, and almost all the June gains are gone, with GNUS lumbering around 118. So legal trouble, stock bubbles, GNUS stock a cartoonish catastrophe. Yet the company's slide since June reflects, besides the lawsuit troubles, a troubling quarter 2 earnings report reported a net loss of $48 per share, and even more talk about the loss. So definitely avoid it. Keep your hands off it. I wouldn't touch it with a 10-foot pole. Let's get back in here to my Webull portfolio. And let's look at that net account value of $162.98. Would be higher if DGLY followed the rest of my portfolio in gains and uptrends, but it didn't, so not much change from the last episode. But we'll see what happens with Levi Viacom. Thinking about selling it. We're heading toward 100% profit now ever since I got the free stock again. If you would like free stocks, link down below. But I'm thinking about selling Viacom, and then I only have one share, so even if it hits $40, $50 would be insanity. But $40, let's say, if it ever did reach 40, that'd be 40 to put in something else, which could get at least 10 shares if it's like a $4 stock. So Viacom could be something good to sell. What do you think? Tell me in the comments below, what would you do in this scenario? But thank you for watching. If you enjoyed this episode, give the video a big thumbs up, smash the like button. And if you want to see more of this on my channel, hit that big red button, the subscribe button, and hit that little notification bell as well. That way you're notified every single time I make a new video. Looking forward to seeing you in the next one.